Hi, this is Darren from Macquarie Warrants Singapore and welcome to another episode of Macquarie Warrants Market View. In this series, hear firsthand from Singapore's investment strategists as they share their views on markets in the coming weeks. For this episode, we have Con Hao, Director of Waypedia and SGX Academy trainer, who will share his views on the Singapore and global markets for this month.
Thank you for having me back on this fourth video. On the first video, we studied into the S&P quarterly chart. It indicated bearishness for the longer-term outlook. However, that does not mean there's no intermittent buying opportunity. On the second video, the weekly chart at the close of the fourth week of March, there was a reversal up signal, indicating a short-term bull, and since then it has reached its high at 3231 on 8th of June. So what is the market telling us moving forward? At the close of the second week of June, this bearish engulfing body surfaced, indicating a reversal down signal, and this is what we have been waiting for since our first video where we discussed about the bearish engulfing body in the quarterly chart. For the local stocks, in the first video, we studied into the short-term bull of DBS and it has reached its high at $23.58 on 9th of June. In the second video, we studied into the short-term bull of OCBC and it has reached its high at $9.95 on 9th of June. And in our last video, we studied into also the short-term bull Mapletree Commercial Trust and its high was at $2.23 on 10th of June. Now I would like to switch my attention back to DBS again. On this fortnightly chart at the close of the 26th of June, it indicated a bearish signal. Studies shown a likelihood for DBS to resume its downtrend and unlikely to retest its recent high at $23.58 anytime soon. Have a profitable weeks ahead and always have a measured risk.
I hope Con Hao's insights have provided you with actionable strategies to trade the current market. Investors keen to trade the S&P in the short term may consider doing so via S&P warrants. Call warrants move in line with the underlying they follow, meaning if the underlying stock or index went up, so will the call warrants. Put warrants move inversely from the underlying and will increase in price when the underlying stock or index falls. While these warrants track the S&P futures listed on a US exchange, the S&P warrants are traded and listed on the SGX in Singapore dollars. These warrants in the table above are the current trending warrants with high liquidity, on tight spreads, and provide the best sensitivity. Now, let us look at another example of how call and put warrants work in relation to the price moves in the underlying they track. In this example, we use the real-life performance of DBS warrants in relation to DBS's share price moves. After reaching a 3-month high of $24 on the morning of 9th June, DBS's share price quickly pulled back 11% to trade at a low of $21 on 29th June. During this period, the trending put over DBS gained 57%, while the trending call declined 56%. Notably, this trending call saw strong buying interest for 1.8 million warrants from warrant investors during this period when DBS backpedaled from its recent high. You would observe from the warrant performance that they have moved 5 times more than DBS's 11% price move. This is due to the effective gearing feature embedded in warrants. A warrant's effective gearing figure refers to how much more a warrant may move in response to the moves in the underlying they track. If a warrant had an effective gearing of 10 times, it means the warrant will move around 10% for every 1% move in the underlying share or index it tracks. The gearing effect is one of the reasons that make warrants popular, but notes that gearing can work both ways, meaning warrants will also move in a bigger magnitude or percentage change than a percentage change move in the underlying should you get your view wrong. To estimate how much you should be investing into warrants, you can also use effective gearing as a guide. As an example, for a shareholder with 100,000 worth of XYZ shares in a portfolio and wishes to hedge against a short-term downward move in the shares, can consider put warrants. If this put warrant has a 10 times gearing, the shareholder needs only to invest into the put warrant an amount that is 10 times less than his share exposure of 100,000. That is, the XYZ shareholder can buy 10,000 worth of this put warrants. I hope you enjoyed today's episode of Market View. Investors who are specified investment products qualified can trade warrants via their online trading account, the same way they would trade shares. For further details on trading warrants, and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by subscribing to our channels on YouTube, Telegram, and Facebook.